They say that there's 7 million buyers sitting on the sideline right now in the United States waiting to purchase a home. What are they waiting for? I'll tell you coming up next. So it depends on who you're listening to, but it could be the National Association of Realtors, it could be a leading economist, it could be Redfin, could be a company, whoever, it could be Zillow. But most people agree that there's about 7 million buyers waiting on the sideline ready to purchase real estate. Hi everyone, Dan Polimino from the Hawaii team in KW Big Island. And in this month's market update, we're going to talk about that. What are the 7 million people waiting for? I'll tell you what they're waiting for. They're waiting for interest rates to drop. But this is silly. And I'm going to show you why this is silly. And I'm going to basically tell you why you should wait. Now you think, well, Dan, that's not very nice. I mean, I don't want to pay 7.1 and paying higher interest rate is not silly. Well, I think when you take a look at what I'm about to show you, you're going to realize that it is better to buy now than it is to wait for interest rates to drop. So let me share a screen with you. So this says interest rate versus higher purchase price. Okay, so we're going to talk about a $1.2 million purchase, probably a short-term vacation rental in the resorts in Waikoloa Beach, like Waikoloa Beach Villas. $1.2 million purchase price at an interest rate of today. I've queried this today. It's 7.125. Okay, 25% down is going to be $300,000. So we've got a loan of $900,000. And we're just doing principal and interest for comparisons here. Principal and interest on this is $6,063, okay? Now, let's say we go with your strategy and we wait for a year. And this time next year, Jerome Powell is no longer the Fed chair. Trump's got his guy in there. They've drastically reduced interest rates. And interest rates, specifically mortgage interest rates, have dropped by a full point a year from now. And they come down to 6.1%. Same purchase, $1.2 million purchase at that current interest rate of 6.1. Same $300,000 down payment, same loan. Okay, principal and interest $5,468, a difference of $595 per month, or a total of $7,140 for the year. This is where you say to me, Dan, you see, that wasn't silly. I'm going to save $7,000 in 1 year. However, let's take a look at what's been happening on the island for the last 35 years. And this island goes up 6% per year, year over year, for the last 35 years. In fact, we're going to, for this exercise, going to use a more realistic number, and we're going to just take a look at what these properties appreciated at last year. So again, we're using the example of Waikoloa Beach, condo, 1.2 million. What was the appreciation rate last year in that neighborhood? Answer, it was 12%. Now, that sounds fantastic. I'm actually taking it down 2 points. I'm taking it down to 10%. But let's say it's somewhere between 8 and 12. Okay? I think we could probably all agree on that. Let's shoot the middle and say 10. So that same year from now, the $1.2 million purchase is up $120,000. That's 10% appreciation. So now I'm going to turn to you and I'm going to say, do you want to pay $7,000 extra? Or do you want to pay $120,000 extra? I think the answer is pretty clear, right? Pay $7,000 extra. Buy now at the higher interest rate and avoid the bigger purchase price. Purchase price will always trump interest rate. It affects people way more than an interest rate does. And this is why I say it's silly to wait for interest rates to come down. Buy at today's prices. In fact, what you could even do, and I don't know if you've considered this, is let's just say you don't want to pay the 7.1%. Ask the lender what it would cost to buy down the rate. Maybe that's a win-win or a compromise in the middle. You can buy now, avoid paying $120,000 more, and you can get in at a lower interest rate with a buy down. You say, well, Dan, the buy down is going to cost $25,000 and I don't want to add an extra $25,000. and I'm just using hypothetical numbers. Okay, I get it, no problem. So let's just go ahead and purchase at the 7.1. Let's wait for interest rates to come down a year from now, and then let's refi at the lower rate, whatever it is, 6, 5.5, 5.75. We'll just refi a year from now. And the worst you're out, about $7,000. You see, that's why I've did this video. I hope it helps, right? Don't wait, because if interest rates do come down and they come down dramatically, let's say they come down into the fives, like 5 or 5.5, that is going to trigger a massive buying frenzy. And what will happen is prices will go through the roof again. There will be bidding wars. Every sale will be a multiple offer situation. It won't be just paying purchase price, it'll be paying over purchase price. And don't put yourself in that situation. Right now, the leverage is yours as a buyer. You don't have to pay purchase price right now. You can pay 20, 30, 40, or even more thousand under purchase price, because there is a lot of inventory on the market, particularly in the condo market. You've heard me say this over and over again. A lot of inventory in the condo market. Leverage is squarely in favor of the buyer. So let's not pay full price. Let's not get into a bidding war. Let's get $10, $20, $30, or $40,000 or more off the purchase price. Let's pay the higher interest rate and let's refi in a year. Hope that makes sense. Last thing I want to talk about in this month's market update. President Trump floated this idea the other day about getting rid of capital gains tax as a way to boost the housing market, make more available inventory, and just revitalize the whole real estate market. I think it's an excellent idea. It's amazing, right? If they can do it and how they do it and when they do it. However, I do want to give you a caution that if they get rid of capital gains tax entirely, it doesn't exempt some states like the state of Hawaii, because in Hawaii, not only do you have a federal capital gains tax, but you also have a state capital gains tax. And if the federal goes away, the state capital gains tax will probably remain. And that's at 7.25% of your purchase price. Now, that only comes into play for people who are selling a second home or investment property. If you're living here as your full-time residence, you're exempt from the capital gains tax. But if this is not your second home, if it is that short-term vacation rent, then you are going to be subject to that 7.25. Currently, the way it stands, people who sell their second home or investment property here, they're subject to a federal capital gains tax and a state capital gains tax. Are there some ways around that? Sure, with a 1031 exchange, we can do that. And there's the option of you coming in living here for 2 years in your investment property as a full-time resident and paying state income taxes and then selling and being exempt. I hope all of that helps. If you'd like to talk more about that, we'll follow the President Trump idea and give you updates as we go along to see if this really does come to fruition. But if we need to help you buy, sell, or invest in real estate, contact us here at the Hawaii team. We'd love to hear from you. Call me on my cell phone, 808-987-3306, 808-987-3306. Check us out at thehawaiiteam.com, and we hope to hear from you soon. Aloha.